So in this video, I'm going to show you guys how to start in Forex trading. No, not only Forex trading, whether you are trading crypto, Forex, stock, indices, anything. As long as you are using candlestick, I'm going to share how to stack trade. So stacking is something that you can use to make a lot of money in a short period of time. But this thing is one thing that some people don't know how to do very well. So stay with me. Let's go into this video. Let me show you guys how to stack and how to multiply your money in a short period of time. Like between 15 to 20 minutes, you can get out from a trade and you make a lot of money instead of getting in with just one position. But remember, stacking is a high risk thing. So if you want to do this, stay and watch what I'm going to say about stacking. Let's go.
So this is it. You can see it. Yeah, that's 2% plus up. Yeah, that's 2% up. You can see it. So it's just retracing back. Just stacking. So I'll go to the chart and show you guys how I'm doing it. It's simple, very easy. That's why you just practice. I just want to use this to confirm something. That's why I'm doing it. I'm not doing it because I wanted today. I just want to say something because I found out that people always ask me, how is it that you stack? Yeah, so that's why I wanted to do this video. Yeah, if I want to exit, I exit now. So let's exit bot operation, close. So let's see. Today, that's 2%. That's 2%. They only go there 2%. Anyway, that's it, man.
If you want to flip accounts or you want to stack, let's say stack account, that's the title of this video, how to stack. You can't do that properly on a higher time frame. Yeah, you can do it on maybe on 15 minutes time frame if you're looking at a longer perspective or a longer view, which is on a longer view. If you get in here, which is where I got in from my initial start, this is on good. Let me remove this so you can see my candlestick very well. Let me remove this too. This was my stop loss. Yeah, my break even. I remove it. So if you get in here, I want to make this candle very big. So if you get in here for a stack, the next place you have to start again here is here, somewhere here that you are seeing this reputation. That's where you get in on another stack again. The next place, let me put in this so that you guys can see it very well. So the first page or row to get in after getting in here. So remember, here is your first entry. Here is another one, second one. The third place you need to get in again is here. That's it. 1, 2, 3. Here is also another place you can get in after this drop here. So in a deeper way, where you are getting in is called, if it is like this trade now, a long or a bullish trend, you need to get in for a stack, or you need to add more position when the market is creating a higher low to create another higher high. So on that particular low, trough, or anything you want to call it, that's where you will stack. You don't stack on top. You don't get in on a higher high. You get in on a higher low. If the trade is on a downward move, let's say this particular one here, let's just use this as an example. Let's say on this trade now. So if it's a downward move, you don't get in here. No, you get in here. If you're getting in here, you're getting in on a discount price. But if you're getting in here, you're getting in on overpriced price. So you get in here, then the market drop. You wait for a retracement, you get in another one here. The market drop another one. Do you get that? That's how you get in. In this case now, if you're trying to get in here, somewhere here now, you are buying and the market will reverse. But when you get in is when the market creates a lower high. Then you look for opportunity, and now you see that now this thing is looking like a lower high. Okay, so you get in on a lower high and wait for the market to create another lower low. This is when the market is on a bearish trend. But in this case where I was trading here, the market is on a bullish trend. That was the reason why I got in here and here. Do you get that? But I hesitated too early. So this is 15 minutes. I didn't trade on 15 minutes on that particular account. I traded on lower time frame. This is it. 5 minutes. At a point I dropped like 3 minutes to just see more. If it is crazy enough, it go to lower time frame, a minute, 1 minute time frame. I don't know who advise you guys that you can't go below so time frame. Man, anything that can help you, use it. Everybody find a way to help themselves. That's why you are seeing them coming outside to teach you this, teach you that, teach you that, teach you this. That doesn't mean that what other people are teaching doesn't work. Everything works. Find what is good for you and use it. Very important to get that. So for me, let me put this as a favorite too, because nowadays I go down to a minute time frame to just see. Because even the 1 minute time frame can show you things. It can show you the lower low, lower high, how it is printing on your chart. Just that it's always a kind of, the candles are always bigger, like scanty. My chart is loading. I pray, okay, this is it. This is it. Are you seeing? So even the 1 minute time frame, you can see something that others are not seeing. On this 1 minute time frame, you can get in on a discount price more than someone trading on a 5 minutes or 15 minutes. Do you see that? Here you can get in on this, maybe as this market drop down to this psychology level, which is 2.910. You can get in here. Very good. So here was another opportunity to get in. As the market is moving, you get in here again. Over here again is another opportunity to stack again. As the market is moving, over here, another opportunity. As the market is moving, what did I say? Over here is another clear opportunity. But there's some crazy people that will also get in somewhere here. There's a lot of crazy people in the market, man. This thing works. So if you get in here and also get in here, it's also the same thing. You can see when I put that bar, it's always over, like on top of this. You see? So when you go down on a lower time frame, like 1 minute, 15, 3 minutes, 5 minutes, you can see so many things clearly more than higher time frame. You see over here, people who start or flip account, this is what they do. This is deep right now. This is deep over here. This is a very clear place to get in on a stack. You get that? This is very big. So another thing that will help you is very clear. I always like to share this to you guys. Yeah, I want to start going live so that I can be showing you guys this thing clearly. Comment below and let me know that you guys want me to be coming live, man. So this is it. Are you seeing? This is position size calculator. So how to use this for your own advantage when you are trading is very clear. So when you put in here, you can put any amount of money you want to put. You can put $5,000. In my case, when that account was $5,000. So here you can put that you want to risk maybe 2% on that particular account. So here you are risking, let's say 30 pips. 30 pips. Okay, so here gold is not here, but gold is on my FS book. So okay, so if you open my FS book, you go over to here, you can see Forex calculator. If you go over Forex calculator, hold on, if you go on home, you go Forex calculator, you can see pip calculator, position size calculator, you go on position size calculator. So this is it. So over here you can see SAUSD. So this is it, SAUSD. This is it over here. So you select the amount, you select the account size, $5,000. So you go on ratio. How many percent do you want to risk? 2%. Stop loss, let's say 40%, 40 pips stop loss, and then you remove this. So you do this 0.5 1. So let's click. So 0.1 money yield $100, unit 2.50, size 0.03, lot size. That's what you're going to use if you are trying to lose 40 pips, want to lose 2%. That's what you're going to lose. Are you seeing it over here? This is my FS book. If you want to calculate your pips on SAUSD, which is good, very simple. Do you get that? That's what you're going to be losing is $100. Your unit is 250 and sizing is 0.03. Once it goes against you, $100, that's 2% of $5,000 account. Do you get that? So but here, position size calculator, if you're not trading gold, you can get other pair here. You get other pair, the same thing, the same pattern. If you're trading, let's say Euro USD, the same pattern. If you click on calculate, so this is what you're going to be. Amount at risk is $100, position size 3.33, blah 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 blah. Yeah, all those numbers. Standard lot, this is 0.333. So the same thing, this ones doesn't count. What counts is 0.3. That's what you're going to use. So at this case, what you're going to be putting is 0.33. That's what you're going to use. This 3 from here, this third and fourth doesn't count. After the decimal point doesn't count. You don't use them mini lot, you don't use them micro lot, you don't use them on MT4. So this is what we use. So with these, you now know that okay, I have 0.33 to risk. What are you going to do? You divide them into 4 or 5. Do you get that? Into 4 or 5. That's how you are going to divide them, and that's what you're going to use. So when you divide them, you go on the chart, you place them accordingly. You go on your chart, you can place them accordingly. So when you exhaust your lot size, you started over here. Remember, you started over somewhere here. Started over here. When you exhaust your lot, before you add any position here, make sure you break even. Or this one. Let me put another one. Your break even have to be here, so that this one can counter the loss that this one is going to bring if the market hits your loss. Do you get that? So that's how it is. So once you start scaling up to the upside, break even, start protecting yourself. Yeah, break even, protect your account size. That's what really matters. Protect yourself. That's what really matters. So I think this is going to be the part 1 of this video. I'm going to drop the part 2, which is going to be a live trade. So I'm going to be trading and I'm going to be showing it practically how I'm breaking even, my emotion and everything. I'm going to do that maybe in the nearest future, I think so. Yeah, so that's it for now, guys.
So stacking is a very high risk trading pattern. So if you want to do this, please make sure you put your stop loss. Very important. Stop loss is one thing that will protect you from not losing or blowing your Forex account. And also use position size calculator to always calculate your lot size. Remember, lot sizing is very important. If you don't know how to use position size calculator, watch this video again. Position size calculator is a very important key factor when it comes to trading. Most people don't know it, especially beginners. I remember when I blew my $100 account because I don't know how to use the right lot size. I blew the account with just putting one standard lot in $100 account. 11 pips, my account is wiped out. Like boom. I was like, what just happened, bro? Long story short, the account gone. I have to cry and sleep and wake up and go in again. So that's it. That's what we do. So I don't want you to do that mistake. As long as you're watching my video, I promise you won't do that mistake. Stay tuned, join the Telegram channel, subscribe. If you don't, please, that is a wrong move. So subscribe. See you guys in the next video.